It's about that time of day again. My name is Joseph. It's Tuesday evening, August 22nd. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro tonight. Crude is sideways and range bound ahead of tomorrow's weekly inventory report, which tells us to focus on failures around the edges of the range ahead of the fireworks tomorrow morning. The S&P is bullish with a spike in channel and a possible trading range, telling us to look for traps and seller failures down at support levels to buy the dip on Wednesday. Nasdaq is bullish with a wedge into a spike in channel, telling us that buyers are most likely waiting for a two-legged pullback off these highs before buying more tomorrow. Gold is bearish, but a flat moving average and some big candlestick wicks are telling us to focus on those failures for selling opportunities up in the battle zone on Wednesday. And of course, Euro's bearish with a spike in range, telling us to look for buyer failures up above those range highs and a target down to yesterday's low. But we got a great newsletter in store for you guys and gals tonight. We got some big news on the schedule for tomorrow. We got some big ranges, keyword ranges. We got some triangles, some sideways ranges, right? We got a great plan of attack for Wednesday's session. Before I jump in, though, and tackle tomorrow's strategy, please don't forget the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter goes live. Follow me on social, StockTwits, Twitter, Facebook, LinkedIn, whatever your flavor of choice. Follow me on social media for always charts, links, and updates throughout the week. And don't forget to grab those charts. How easy is that? All the charts from tonight's video, that's right, you can have them ready on your computer for tomorrow, right where it says click here to download those charts. Get those charts ready for tomorrow's session. And what are you waiting for? Grab that free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. If you're not an advanced member here at School of Trade and you want to learn the who, what, where, when, and why and see what we're all about here, join that free pass. Come on, join me as a guest in the trade room this week, right? You will not regret. And don't forget, if you got any questions on the way, I'm always here to answer your questions 24/7, 365. Hit me up on live support on the right-hand side of our blog and on our homepage at schooloftrade.com. Let's jump right in. We got a big, big day tomorrow. A lot of news to work with tomorrow. And of course, if you didn't notice today, quite a bit of either straight up or straight sideways, right? We'll grab a look at that in just a moment. Tomorrow is Wednesday, hump day here tomorrow, August the 23rd. Quick taking a look at the news tonight. We have no major news on the calendar this evening. And of course, we go right into a peppering of news tomorrow. Flash composites, 3 o'clock, 3:30, and 4 o'clock. France, Germany, and of course the ECB tomorrow morning to kick off the overnight London session. So if you're trading the London session, which of course opens up at 3 o'clock Eastern time, you guys got some great fireworks and hopefully a shot in the arm to get the day started early tomorrow session. Now don't forget, of course, if you're with me tomorrow in the trade room tomorrow morning, we open up at 8 o'clock Eastern time, and we have that 9:45 composite flash as well, just after the NYSE open at 9:45. We get some small consumer confidence at 10 o'clock. 10 o'clock, don't forget, is always a big time of the day for big kind of unexpected moves. We call it the 10 o'clock shock, so look out for that tomorrow morning at 10 a.m. And we also have those new home sales tomorrow at 10 a.m. as well. So right around that 9:45 to 10 o'clock hour, expecting a bit of fireworks tomorrow, right across all markets, right? The PMI composite flash and those new home sales. And then, of course, don't forget about tomorrow's weekly inventory report. If you're a crude trader like I am, right, you know this weekly inventory report means all hell breaks loose tomorrow morning as of about 10:30 Eastern time. A couple things you want to keep in mind if you're trading crude tomorrow morning. First of all, early in, early out. Get to those trades early. Anything after 10 a.m. on Wednesday mornings is going to be lower probability. Also, after the news comes out, give it 5 or 10 minutes. You know, typically we'll go 5 minutes before and then we'll play it by ear afterwards, right? On Wednesdays for inventories, really anything after 10 o'clock, my official cutoff is 10:15, and then we'll give it 5, 10, maybe even 15 minutes sometimes to let that craziness slow down after 10:30. So the moral of the story is get at it early, right? Get at it early, right? And wrap things up before 10:15, and then be careful after that news comes out tomorrow morning after, 10:40, 10:45. One more thing. Below this video tonight, and I also sent this out earlier on for you guys on my social media feeds. If you follow me on social, you guys got this earlier. But I always publish my weekly inventory support and resistance. So if you want to see those weekly inventory levels, you can just scroll down below the video on the blog. Right, go to sidewaysmarkets.com. If you're watching the video right now on YouTube, right, don't forget the link in the description. Follow that link. And if you're watching me right now on Sideways Markets, scroll down. There's a button here that says click here to read more, and you'll find all of the inventory levels that we'll use for tomorrow. So again, make sure you scroll down below this video tonight. Click here where it says click here to read more, right? And don't forget to check out those support and resistance levels. They'll only be good for Wednesday, right? Only be good for Wednesday, and be using those levels, right, tomorrow in our trade room. Speaking of trade room, don't forget to come out and join me tomorrow morning. Opening up 8 o'clock Eastern time. I expect to see you there. Let's jump right in here tonight. We got crude, S&P. We'll do some Nasdaq, some gold, and we'll wrap up on the euro. Crude is range bound and sideways ahead of tomorrow's weekly inventory report, which tells us to focus on failures of the highs and lows using the 2-try rule tomorrow. The biggest challenge for tomorrow is this big news report at 10:30 a.m. Eastern time, which means the next 16, 18 hours are going to be a pretty big variable ahead of the news. Most important aspect tomorrow is to get at it early, with the best trading opportunities coming before 10 a.m. Eastern time, and staying patient after that news comes out. Now, once again, I've got your support and resistance levels here for tomorrow. Don't forget, all of these levels can be found on the blog at sidewaysmarkets.com. I posted these levels right earlier on my Twitter, Facebook, and of course, Stock Twits feeds, right? So make sure you guys check those levels out for tomorrow as well. As you can see, though, looking at the chart here, strong move down from last night's newsletter, right? We had plenty of opportunity to sell high today. If you followed my advice from last night's newsletter, you were ready to sell high in today's session. Beautiful example of that trap high. Beautiful example of that trap high. Really, really easy selling opportunities off the highs here today. But as you can see, though, they were unable to get back down and retest that low. Remember, anytime we see a strong move in one direction, we typically expect price to go up and then retest that low. As you can see right now, the sellers tried once. They've tried twice now, and all we're seeing is some higher lows and lower highs on the chart. Combine that with the flat moving average, and ahead of tomorrow's weekly inventory report, we know that this market is likely winding up like a good old jack in the box, right? And once the news comes out tomorrow morning, this could really explode higher. So the key right now is get to it before the news comes out, because this could really wind up like a jack in the box ahead of that 10:30 news tomorrow. Zooming in a little bit closer on this chart, and we can see, right, that flat moving average. And really right now our main focus, and we talked about this last night, was really to look at the swings here right now, right? Find the extremes, such as the 47.36, such as that prior day low at 47.21. Find the extremes, right? So that 48.21, right? That naked reversal line, which still hasn't been tested, right? And of course that 48.54. Stay away from the middle. Right, the rule of thumb, right, the 3 rules we look for, right, when it comes to range-bound days, right, is buy low, sell high, avoid the middle, focus on failures, and use that 2-try rule, right? So those 3 rules, right, those 3 rules for trading during range-bound markets, right? Buy low, sell high, avoid the middle. That's rule number 1. Second, focus on failures, right? Focus on failures, right? So buyer failure above the high, seller failure below low. And the last one was, that's right, the 2-try rule, right? So how do we do that? How do we do 2-try? Right? 1 try, 2 try, focus on buyer failure, and back down in. To the downside, one try, two try, focus on seller failure, right? And then back down in. One try, two try, one try, two try. We saw a great example today on the E-minis of a successful breakout of that range. If you watched last night's newsletter, right, and we talk about those E-mini ranges, we had a successful breakout, right? So don't forget, what does a breakout look like? One try, two try, and continuation. Right? Pretty simple. If the second try is successful, then we know we have a successful breakout. One try, two try, right? And we're going lower from there. So again, up, one try, two try, back down. Stay away from that middle, right? Down, one try, two try, back up. Stay away from the middle. Hardest part about a range-bound market is staying away from the middle, because if you don't grab it at the lows or the highs, again, really keep your eyes peeled on these extremes, right? These extremes are definitely going to be our priority here. One, two, back down. One, two, back down. Don't mess around with it in the middle. And it's easier said than done, right? There's nothing more difficult than watching a market sit in the middle of a trading range. I know as human beings, we feel like we're wasting time, right, by not pushing buttons during our trading day. But remember, a lot of times on range-bound markets, the best position is no position. So keep that in mind for tomorrow. As we go into the news tomorrow morning, again, we have some potential for a big breakout, right? So look for that one try, two try to hold, one try, two try to hold. Some targets are definitely going to be the measured move and the prior week low for the sellers, right? The prior day high and the prior week high here for the buyers. Don't forget, you don't have to do this alone tomorrow. Come join me in the trade room, 8 o'clock Eastern time, and we'll do it together. How about we keep rolling? How about some S&P? S&P is bullish with a spike in channel, which may develop sideways into a trading range tomorrow. The spike in channel tells us the buyers have been going at this pretty much all day today. They're likely fat and happy here now. They're most likely to start thinking about taking some profit at some point, right? And also, too, buyers are going to be weary of buying more up here. That's the most important thing, right? Eventually, we're going to have to wait for this thing to pull back to really attract more buyers into this market. The goal now for tomorrow is to look for traps and seller failures down at support levels with a target going back up to retest the high. You know, we talked about this range-bound market from last night's newsletter, right? We were range-bound last night. Well, here's what a two-try, one, two, and a successful breakout looks like, right? We talked about that last night on the newsletter. Once we saw that new high, it was pretty easy to see this market was off to the races as a new trending day. Strong spike up, that turns into a spike and channel. Now, here is one of those spike and channels, and there are lots of different kind of variations of spike and channels. You know, sometimes it's a small spike, right, in a big channel like this, right? Small spike, big channel. Sometimes it's a big spike and a small channel, right? So sometimes it's a little bit different, right? So different variations of that spike and channel. Here, as you go back to that channel now, you can see, right, it's a relatively small spike, right, with this big channel. Now, most of the time, a spike and channel will tell me, oh, sorry about that, wrong button there. Most of the time, a spike and channel tells us to look back at the base of that channel, right? We call that kind of the correction zone. But you'll notice in this particular example, right, it's going to be a small miracle if we can get that deep of a pullback. In fact, if it pulls all the way back to 24.38, 24.37.5, it's going to be a bear market at that point, right? So we're probably not going to get your typical, you know, two-legged pullback into that battle zone or into that correction zone for tomorrow, right? So this is a good example of a variation of a spike in channel that, you know, normally if we were talking right here, right, if we were right here, you know, if we were sitting right on the double up right now, I would say absolutely. This could easily pull back, right, back to the base of that channel. Beautiful. That's easy. But this one probably not going to be the case. So what I'm going to do is I'm going to look for an area where looks like we saw some consolidation and a little bit of what I call exhaustion. And that's right in these areas right here. Some really big candlesticks, right, which look like, right, we kind of broke up and then ran higher to push through. Bottom line is That's where I'd like to see us pulling back here for tomorrow. Now, a couple things we're watching for here. Obviously, we're bullish. We'd like to be a buyer back at support. Find support levels below the highs here right now. Here's a beautiful gap. That's a price action gap at 47 3/4. That would really be kind of the bare minimum I'd be looking for tomorrow, right, to be buying as low as possible. That price action gap is another example of the many different ways in which we use kind of a modern day application of candlestick patterns. If you want to learn more about the trading strategies we use here at School of Trade, I get so many great questions from you guys in my email box, on my YouTube channel, on my Facebook pages, right? Don't forget, if you want to learn more about the trading strategies we use, the analysis we use, the patterns we use, make sure you join our free trial. I think it's one of the best in the business. You're going to learn more with me for free on that trial than you will on most paid websites out there. I can guarantee you that. Grab that free trial on the homepage of School of Trade. There's a link in the description of the YouTube video. While you're here, don't forget, learn more about beginner, intermediate, and advanced membership. We have great flexible summertime payment options, right, for our advanced membership levels. And don't forget, I'm always here to help. Got any questions? Hit me up on live support on the right-hand side of the website. Tomorrow morning, we'll be back in our trade room at 8 o'clock Eastern time. I look forward to seeing you there. Don't forget the major news tomorrow morning around 10 o'clock and 10:30, especially for all you crude oil traders. Grab those charts. Be ready for tomorrow. If I don't see you guys tomorrow morning, we'll do it all again tomorrow evening before 8 p.m. Eastern time, same place on this nightly newsletter. That'll do it for me. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.